Morning, ladies and gentlemen. Keith is gone, but thanks for introducing me. I appreciate the opportunity to talk to you about SilverCrest this morning. 10 minutes is not very long, so I'm going to probably try and do this in one breath. This is a shortened version of a presentation that we have at our booth, so if you miss something, just drop by and pick up the full size. The disclaimer, of course, just cautions you not to rely on anything I say or show you in the next 10 minutes. In a short form, SilverCrest is a low-cost, highly profitable gold and silver producer in Mexico. We have an expansion program underway for the production that we have at the moment that will double our production by 2014. We've got extensive drilling programs going on that will increase our resource and reserve base, and we have a blue sky project in the form of La Joya that should be coming on stream sometime in 2017. Just short financial things on where we stand right now. We've had a good first half. Our revenues were $35.5 million. Our cash flow was about $19 million, or just over about $3 million a month. 22 cents a share in cash flow and 10 cents a share in earnings. As of June 30th, we had just under 35 million in the treasury, and we've been able to maintain our operating costs at about $7 a silver equivalent ounce. And when I mention equivalents with respect to Santa Elena, those are a conversion of gold. There's no silver, or sorry, that's gold and silver. There's no lead, zinc, or other types of metals in there. Our resource base at this point in all categories is probably something in the order of 150 million ounces of silver equivalent. And we do have a new major project, as I mentioned, the La Joya in Durango State, that we've identified 102 million ounces of silver equivalent, and we have an extensive drill program that we think will increase that dramatically by the end of the year. That shows you what we've sold over the last 4 or 5 quarters, and you can see the first couple of quarters in 2011 we were in the ramp-up stage, and we've reached pretty much steady stage production at this point at Santa Elena. In terms of core capital structure, we're reasonably well structured. We have just under 90 million shares outstanding. Management and directors own about 10% of that fully diluted position. We have a strong independent board that keeps us on track in terms of compliance and just general business operations. Our daily volumes are growing fairly dramatically over the last little while. I don't know what they would be just immediately, but we've been trading 4 and 5 and up to 1 million shares a day recently. We have an excellent management team. I won't go into it in detail, but all of us are I have more experience in the business than I really care to admit to. This is the 4th mine that Eric Fear has been involved in terms of development and production, and we've all had experience in all phases of the exploration, development, finance, and production business in the mining sector. Our flagship property is the Santa Elena Mine. As you can see, it's just about 2 hours drive from Hermosillo. It's about 3 hours south of Tucson, so we're ideally located next to water, power, people, paved roads, which makes it much easier to develop than if you're in the top of the Andes Mountains someplace. The first phase of the Santa Elena Mine is a open pit heap leach. For those of you not familiar with that, the top left corner you can see the open pit where we mine the ore. We put it through the crusher in the top right hand side. That goes down to about -3/8 sizing, which gets piled on the heaps that you see in the left-hand corner. We sprinkle that with a dilute solution of cyanide, which absorbs the gold and silver into the pregnant solution pond. That goes through a Merrill-Crowe system, which covers the gold and silver, and we pour it out as doré bars, as you can see in the bottom right-hand corner. This year we expect to produce about 33,000 to 35,000 ounces of gold and about 435,000 to 450,000 ounces of silver. And with our $7 silver equivalent ounce, we've been selling for plus or minus $30 a silver equivalent ounce. And so we have very, very good margins, which makes us quite profitable, as you can see from that previous slide. In terms of expansion of the current resource and reserves that we have, the yellow line that you see going across the top of the slide is the bottom of the open pit as we see it at the moment. We're doing in-pit drilling to give a little better control and consistency on the mining that we're doing. The underground reserve drilling that in that next block, we expect to bring that red portion into the reserve category. That's very high grade material for an open pit heap leach. And off to the right, the body is open both to depth and along strike. The sharp edge that you see there on the right-hand side is a data edge, or a lack of data edge, that you can see. In the top right-hand corner, you can see the production drift or decline that we're under construction on, and we're down there about 625 meters with a target of 1,500 meters towards the year end. We have an expansion program underway at Santa Elena. If you look at the grades that we're putting on the heap leach right now and the relative recoveries of gold and silver, you'll see that at the end of that phase, those heaps contain a huge amount of recoverable metal if you put them through a conventional mill. We estimate that by the time we have a 3,000 ton a day mill ready to go in 2014, there's probably $75 to $100 million worth of recoverable metal in those heaps alone. So that'll give us a good, easy source for feeding that mill, and the rest will come from underground and a satellite deposit, Cruz de Mayo, that's a bit away. That will take our production. This year we expect to do about 2.2 million ounces of silver equivalent, and we expect by 2014 to be in the 4 to 5 million ounce silver equivalent range. And if you apply the $30 revenue number to the roughly $10 cost number, you can see that we'll have a very, very strong cash flow come that point in time. This would give you an idea of what our production would look like. The 2011, 12, 13 is the current open pit phase. The big bump in 2014, 2015 is when the mill would kick in, and we would see some higher grades and higher silver numbers coming out of the pit, along with higher recoveries. We'll be up in the 90 plus range for gold, and probably 80% of the silver will come out of that process, where right now in the heap leach we get about 40% of the silver and just about 70% of the gold. We haven't included in this production profile any of the extensions of the deposit. This is simply the reserve and resource base that we currently have at the moment. We expect that around 2017, it's a little early to put a number on that, but the La Jolla project that we have in Durango will come on stream. And speaking of La Jolla, we picked this property up a year and a half ago. It's in an ideal district again. It's in Durango State, about two hours south of Durango City. It's across the valley from First Majestic's La Parrilla mine and just north of the San Martin and Sabinas mines that are held by Grupo Mexico and Penoles. Those two mines, the latter two mines, have been there for 300 or 400 years. Our guys have been down to the Sabinas mine and have been through that and through their production units, and we're seeing a lot of the similar geology and things that we have in the La Jolla deposit up in the center of that slide. It's a pretty straightforward geological model. It sticks up out of the ground, as you can see there. The sediments are cross-cut by near vertical structures that are mineralized, which in turn have mineralized the horizontal beds. And so pretty much the whole of that mountainside from the top to the valley floor is mineralized to one degree or another. And we're in the process of determining which parts of that are economic and how it'll work out. The first 27 holes that we did, we got inferred resources of 102 million tons, and it leaves a lot of room in that mineralized zone to expand that. We've just completed, or in the process of completing, an additional 60 holes that we hope to, our target is to double the 102 million ounces of silver equivalent that we have already. The blue is the 80 holes that we've seen, or sorry, that we've been drilling. And you can see that in the main mineralized trend, we'll have that nailed down pretty well. And there are 3 other side potential deposits that we think will add to all of that. We added a bunch of land to it. The dashed ground in between, the darker red is what we were purchasing. The other is to cover some airborne geophysical anomalies that look deadly similar to the La Jolla deposit as we know it now. To the north of us is Goldcorp, and they have just expanded their land position to several kilometers north of that green outline. On a peer comparable basis, we're right at the moment, but creeping up fairly steadily at the bottom of our peer comparisons for net asset values and market cap on an ounce of silver equivalent basis. So we've got some room to go. We've had a pretty good run. Our stock is trading about 280 at the moment, 285. And we have 5 analysts that are covering us, and their targets for 12 to 18 months are in the range of 350 to 525. Come and see us at our booth if you have any additional questions. Thanks for your time and attention.